Hello there, this is James and you're watching Tixee Live. And a very good morning to all of you, and all of you a very happy Thursday. In today's program, I want to discuss how the BOE relief rally has faded and talk about the circumstances currently facing the market, plus a couple of things happening today which could add more volatility to the already very dramatic market we're facing at the moment. But before I get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, I'm a bit gloomy again today. I have been, pretty gloomy and bearish over the last couple of videos, over the last month or so, because there's not much things to be bullish about. But I really want to talk about where we are at the moment in the markets. I know the market is transfixed with the meltdown happening in the UK. And of course, I'm a little bit tired of talking about the Bank of England, the UK, but that's the main headline news at the moment. And that is having a massive impact on the market in general. So there's a couple of questions I want to sort of go through, and maybe a potential solution to the problem, which could possibly put a bit of market stability, and whether or not that option can actually happen and would actually happen. But anyway, let's get into what's happening with the market at the moment. Well, basically, yesterday we had a bit of a market relief rally on the back of the fact that Bank of England intervened in the bond market, and they started buying, and they're committed to buying UK government bonds, or 20-year bonds, until October the 14th, okay, which obviously is quantitative easing. Those of you who watched my video yesterday, I explained what quantitative easing is, which gave the bond market a bit of a boost, and not just the UK bond market, but the US bond market, and it gave a bit of a boost to the market in general. However, like everything, it's been very, very short-lived, because we got the UK bond market slides once again. We have the sterling once again under pressure, and the market again in the red. So what's not helping the matter, of course, is the UK government's refusal to do a U-turn. Now, Liz Truss has broken radio silence since this drama happened on Friday, since the mini budget was announced and the whole market lost its mind. She's been very, very, very quiet, but about the situation, she hasn't said anything. But she has broken radio silence, surprisingly, on the radio. What she's doing today, she's going over a number of local radio stations to try and express her commitment to the cause. She's basically said there's going to be no U-turn on the mini budget whatsoever, and that the UK is not the only country suffering, which she is correct. The UK is not the only country, but it's the country which is getting the most focus and has had the most drama over the last couple of trading sessions. And she's also really sort of committed to that. She's no going back. She's committed to long-term gains, and this again is hurting the sterling and hurting UK assets and hurting the market, because, like I say, like I said yesterday, there is the big problem they're facing is credibility. Is credibility, not just for the party, but for the UK as a financial institution. Don't forget that London is a huge financial institution, and it's lacking credibility now. The only way around it is if the government and the Bank of England can act together, which clearly they're at odds. They're not. They're saying they're committed to working together, but clearly they're not. And this is causing a lot of concern, not just for the UK market, but the market in general. There's even pressure mounting on her to fire their chancellor, with the mini budget. I mean, this is how dramatic this is. This really is the matchstick on the market, is this whole thing. It's not the cause, it's the trigger. You know what I mean? So she's even got pressure to fire the chancellor, but she's not going to do that. Would she have to stick by it as she didn't? And that's a good question. Would she have to stick by it as if she didn't, then it was showing incompetence and could weaken the sterling. Well, she's incompetent anyway. Look, the market would have a bit of relief because they're really generally worried that if they can proceed with the these tax cuts, the UK government is not going to have the money to pay for it, and they're going to get into more and more debt. So by saying, I'm not necessarily cancelling it, but by stalling it might restore a little bit of confidence. That and the Bank of England increasing interest rates would show unity and would show a little bit more, that they're being efficient. But at the moment, they lack all forms of competency and credibility. So this is the problem they've got. But like I was saying, like I say, she's been being pressured to fire the chancellor, but she's not going to do that because they're friends, for one, apparently. They're both politically aligned as well, so that's not likely to happen at all. But this is how big this story is still going on and how the market is still reacting to it. Mark Carney, the former Bank of England governor. I used to watch his press conferences a lot. I liked him a lot, so I gave him the nickname Carney. But he joins the UK government bashing club. Already, we've had the US come out and criticize the UK government for the tax cuts. The IMF, more importantly, International Monetary Fund, has criticized and named the UK government in particular for making a very bad mistake with this. But Mark Carney, a very well-respected individual who, again, like I say, used to be the Bank of England governor before obviously Bailey in now. He's come out and he's criticized the UK government for sabotaging the relationship between that and the British financial institution, which of course is the Bank of England, and making it more difficult. So more and more people, highly regarded organizations are coming out and criticizing the UK government and the current financial mess they are in. Now, there is more rumors, of course, again, that the Bank of England will not just intervene in the bond market like I did yesterday, but will finally maybe increase interest rates. The general consensus, they will probably raise by 100 basic points. There was rumors of even 200. But again, there's rumors they might do it beforehand, but the next meeting is not till November. The question I have for you, can they wait that long? And I don't think they can. But anyway, let's have a quick look at the market as it stands at the moment. Let's have a quick look. Okay, so this is the cable, the British pound, US dollar. Like I say, the relief rally done by the Bank of England intervention yesterday managed to push the sterling up to 1.0870, which is a key level I've been keeping my eye on. Couldn't break it. And obviously, like I said, the relief rally or the relief bounce has now faded. And the sterling is now currently trading again under 108, not quite at the record lows, but still at 1.0791. It's going to be a little bit calmer today, but we've got some data coming which could change it. The first key potential support I'm watching is 1.0639. The euro, again, like I say, the relief rally, it also was helped by the Bank of England yesterday. Again, still under pressure, 0.9654, so way under parity. The dollar yen, again, slightly more bullish. Again, the yen had a little bit of reprieve because of the Bank of England relief rally yesterday. But again, the yen is challenging 1.4471. Again, like I say, we're still hovering around that trend line as well. Really, the next target, if it can push it, and depends if the Bank of Japan will decide to intervene again, is 145.65. Gold, I was talking about gold yesterday. That was benefiting for the yields, because now everything has gone back to normal. Before the BOE intervention, it's now back under that key area I was watching, $1,667.86, currently trading 1,644. Because like I say, the UK bonds have gone down again, the US bond yields have gone up again. So this is affecting the precious metal as well. So I'm going to get into the question: are we brinkling on the financial abyss? Because obviously, all the drama and all the focus is on the UK at the moment. It's all about the UK and the complete economic mess it's currently in. But it's not just the UK. As Truss was right on that. It's not just the UK. We're the worst off at the moment, but it's not just the UK. It's everywhere. And the real main problem is the US dollar is basically breaking the market. A strong dollar is breaking the market. And like I said yesterday, you've had 2021 where the US did a load of stimulus. 2022, you've had aggressive rate hikes to fight inflation, obviously, but which is making the US dollar very, very strong. I mean, you've got the euro, 20-year low, the yen, 24-year low, Chinese yuan, all-time low, British pound hitting all-time low. It's the dollar is breaking everything. And the one way around this, which I don't know if they can do this or they will do it, is what they did back in 1985. In 1985, the markets were facing something similar, not as dramatic as this. Like I say, the pound has never been to these low levels, even back in 1985. But we had a very, very strong US dollar. And what happened was, to try and calm the markets, they weakened the dollar. The central banks of Bank of England, etc., other central banks got together with the Fed and they agreed to weaken the US dollar to help all the other markets out. Can they do that again? Because that, to be honest, is what is needed to be done. We already assume we're heading into a recession. We've assumed this. We know this. But to calm the markets down and to give it a little bit of a lifeline, they need to weaken the dollar. And the Fed needs to be on par with the ECB, Bank of Japan, Bank of England. They need to work together to weaken the dollar. And that's the thing, because already, let's face it, BOJ's had to intervene. The Bank of England's had to intervene. Yes, because half of them, because of the causing of themselves and by the UK government, but it's not helped by the US dollar, which is the overall problem. So can they get together? Or are we, just like I say, going to literally keep pushing us? But anyway, that's my little rant over with. Today, other news coming up. We got German CPI due at 12 p.m. UTC. Expectation. Now, this is frightening. 10% is the expectation. Previous reading was 8.8%. And something else which is really big today, potentially a big market mover, which could weaken the sterling, euro, and yen even further, and gold. It's US GDP due at 12:30 p.m. UTC. Expectation is negative 0.6%. Previous reading negative 0.6%. Of course, I will be doing a watch along for this, starting at 12:20 p.m. UTC. So please come and join me for that. Potentially, it could be a key market mover. So it would be interesting to see how that unfolds. So like the big events coming up, of course, obviously we got, like I say, German CPI today, US GDP, UK GDP tomorrow. Now that's going to be a good one. And EU CPI. The market, as it currently stands, all in the red. FTSE negative 2.18%, DAX negative 1.33%, Euro Stock 50 currently trading negative 2.18%. Boy, that Bank of England relief rally certainly lasted long, didn't it? Anyway, don't forget you can ask me questions anytime you wish, or simply say hello if you like. Or share with me your opinions. Let me know what you think. Am I being a bit over dramatic with the financial abyss? Is the one solution to weaken the US dollar to help all the other currencies out? I mean, obviously, we've got so many other things. You know, UK is going to head into recession, might be already in recession. EU energy crisis is huge. We're not even in winter yet. That's a major thing. You know, so we have got a number of factors. But like I say, a strong US dollar is certainly not helping. And that's the one way of trying to calm it down is trying to weaken the dollar. And the only way they can do that is if all the central banks get together and agree to work together in weakening the greenback. Again, that's just my opinion. That's just my opinion. But share with me what you think, what your opinions are. Do you think that is a solution? Or do you think the dollar will weaken itself anyway? You know, because it can only be the top dog for so long, can't it? You know, eventually every champion needs to be replaced in one way or another. Okay, not a problem. Not a problem. If you think of a question later, put it in the comment section, either on Facebook or YouTube. I will see them and I will reply to them next time I'm live on air. Of course, which will be at, oh, it's a question. Well, yeah, they do. And I said this yesterday. You can't be just, you know, one or another. The biggest problem the UK market faces at the moment is the, you know, lack of confidence in them and then their integrity and their reputation. They need to repair that. And the only way they can do that is if the BOE and the UK government come out successfully working together. But at the moment, it's all over the place. And like I say, it's really lost a lot of respect in the financial community. It's acting like, The UK market is acting like an emerging market. That's how erratic it is. I know this is a story we've been talking about a lot over the last couple of videos, but this is the case. This is the big story. It's acting like an emerging market. It's not acting like a G7 market. It's a G7 country. It's not acting like that. It's acting like an emerging market. But yeah, you're absolutely right. Good questions and good point. Like I was saying, if you think of a question later, put it in the comment section, either YouTube and Facebook. I will see them and I will reply to them next time I go live on air. Anyway, if there's no further questions, don't forget, if you're watching me on Facebook and you've liked this little video, by all means, give us a follow. If you're watching us on YouTube and you enjoy this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it useful, interesting, and you've put up with me, give me one of those. It's nice to know that you like what I do. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.